What's up, fam? I'm going to show you guys real quick how to do options on Robinhood. So let's say I go to my Robinhood app right now, log in, blah, 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 scroll back. So keep in mind that when you're doing options trading, you have to apply for it on whatever brokerage you're at. So let's say I'm on Robinhood right now. I'll go ahead and scroll down to, this is within my menu settings, menu, investing, scroll down. We've got options trading right here. When you haven't applied yet, it'll say like, no, it won't say like what level you are. So you would have to click the green button, which would say apply for options, something along those lines. You go, you apply, it takes like 30 seconds. Get approved for it, and then you'll be approved. Most of the time, 9 times out of 10, you'll be approved for options level 2, which is pretty much all you need. Now what you do is you want to go and let's say I pick a random stock. Let's say I pick AMC, right? Go to AMC. Oh, I already had it up. Go ahead and go to AMC, sitting at currently $9.06, right? Trade options. It'll have a list of dates here, a list of dates from this Friday, which would be March 5th, all the way through however many dates they have listed. This one has January 20th, 2023. Ridiculous. But let's say I pick one for March 5th. Go ahead and scroll down, right? You'll see all these calls here, all of these in the money calls right here. Now keep in mind, if you need like an explanation of what in the money versus out of the money is, just go ahead and check out my other video that I had posted, right? So let's say this one was I want to pick a $10 call for March 5th. That's basically saying that I believe that AMC will hit $10 by the end of this week, by March 5th. So let's say I click that call, right? I click this call, it'll show your strike price up top. Hey, you believe that AMC will hit $10 by March 5th. Then it will show the number of contracts number of shares that go with each contract, which is 100. You will have your limit price, which is right here. That's the amount of premium you will pay per share for the contract, as well as the bid and the ask price. That bid and ask price is so close, which means that the liquidity is obviously very high. So let's say I wanted to put in for one contract. You don't have to only buy one contract. You could buy more. You could buy 3. You could buy 10 if you wanted to. But let's say we're buying one. We buy one contract. That max cost would be $88. That means you're paying max 88 cents per share for that contract. Each contract within this has 100 shares. So you're going to pay essentially 88 cents times 100, which is $88. You would pay that amount, you would review it, blah, blah, blah. Of course, I don't have enough funds in here, but you would pay that, you would get that contract. It'll send you a notification saying, hey, you have this contract, your contract was filled in, and it'll populate in here. It'll, like right here, it says stocks and lists. Right above it, it will say options. And keep in mind that you want to keep in mind your break-even price for these options. So let's say we go back to AMC. You would want to keep in mind, like let's say I go back for that $10 option call for March 5th. That's kind of the number you're looking out for, this break-even price right there. That means that I have made back the money that I have spent on my premium, that $88 on this contract, if it goes up to that break-even price. So just kind of keep that in mind when you're doing options. Again, I'm not a financial advisor, but I can show people how to do different things that I didn't know when I first started. But yeah, that's pretty much it. Peace.